This is an uncovered Japan company research report on Vector, ticker 6058. Vector is Japan's largest public relations firm, but it is more than an agency. It combines strategic PR with press release distribution, taxi-top digital signage, and in-house social channels. The investment question is whether that owned distribution, high returns, and a push into short video can justify a valuation that remains near the low end of its recent range. At the report's reference date, Vector traded at about 12.1 times the fiscal 2027 earnings estimate, while earning roughly a 25% return on equity. It had about 14.7 billion yen of net cash, and management's next operating profit plan is 10 billion yen. Those figures frame the case. The market is not paying a high multiple for a business with strong returns, but it is waiting for proof that the next growth investments will hold their margins. The product is easiest to understand as a workflow. A client starts with a message and a PR strategy. Vector can then make content and distribute it through PR Times, growth taxi-top signage, and its own social accounts, alongside conventional media relations. This matters because a traditional advertising agency normally rents someone else's media inventory. Vector owns several exits itself, so it can retain more of the economics and cross-sell a customer from a low-cost press release into a broader communications program. The 5-year earnings trend is the strongest financial evidence. Revenue grew from 48.1 billion yen in fiscal 2022 to 63.8 billion in fiscal 2026, while operating profit rose from 5.1 billion to 9.1 billion. That lifted the operating margin from 10.7% to 14.3%. The report attributes the improvement to better business mix, particularly higher margin PR Times and growth, alongside the repair or disposal of loss-making units. The segment mix explains why the group margin can improve. PR and advertising makes up 55% of sales and reached a 14% operating margin in fiscal 2026. PR Times is smaller, at 15% of sales, but earned a 37.9% margin and serves 124,000 companies. The remaining segments matter for context. Direct marketing adds revenue at lower margin, while the investment segment can move reported profits sharply and made a 500 million yen operating loss in fiscal 2026. Net income is the number to handle carefully. Operating profit has compounded steadily, but net income has moved around with venture investment gains, impairments, and special items. In fiscal 2026, the investment segment recorded a loss because management deferred asset sales, while a disposal gain and a subsidiary debt waiver loss nearly offset below the line. The report's practical conclusion is to anchor on operating profit and cash generation, then treat any single year's net income result as a noisier measure of the underlying business. Cash flow is the check on the profit story. Fiscal 2026 operating cash flow reached a record 10.4 billion yen, and free cash flow was 7.2 billion. Cash and deposits were 22.3 billion yen against 7.6 billion of interest-bearing debt, leaving roughly 14.7 billion of net cash. Goodwill of 2.86 billion yen remains an impairment risk, but the business now has a very different balance sheet profile from its earlier acquisition-led period. Vector's moat is not simply creative talent. It is the combination of retainer relationships with distribution infrastructure. PR Times is Japan's leading press release platform. Growth is the largest taxi-top signage network in Tokyo, and Vector's in-house themed social accounts generate roughly 10 billion monthly views. The company also has more than 3,000 retainer clients. That structure lets a relationship begin with a simple press release and expand into PR, signage, or short video work, which is much harder to reproduce for a media buying agency. The next strategic bet is short video. Vector aims eventually to double operating profit to 20 billion yen by combining PR, short video production, distribution, commerce, and measurement in a more scalable platform. The report sees a real market tailwind as Japanese ad spending shifts towards short-form video, but it does not treat the outcome as assured. Platform policy changes, algorithm dependence, and advertising slowdown, and AI-driven commoditization could all weaken the economics. The milestones to watch are order momentum, margin resilience, and whether the measurement software actually scales. Valuation is tied to execution history. Vector's forward PE is about 12.1 times, below the report's 4-year average of 13.8 times, and near the lower end of the post-reset range. Historically, earnings revision years have pulled the multiple toward 10 times, while plan beat years have moved it into the low teens or higher. At a roughly 25% return on equity, the report argues that a 3.16 times price-to-book ratio is not automatically expensive. But the valuation will still depend on the quality of the next earnings delivery. The report's scenarios are author estimates, not price targets or recommendations. From a reference price of about 1,422 yen, the bear case is roughly 900, the base case about 1,590, and the bull case about 2,450. The bear combines a short video misfire, weak advertising demand, and impairment pressure. The base assumes moderate growth and a gently rising margin. The bull assumes the short video strategy scales and the 20 billion yen operating profit path comes into view. That spread is a reminder to watch operating margins and strategic execution, rather than a single valuation multiple. Vector pairs a differentiated communications platform with better-than-average financial quality, rising operating margins, strong cash conversion, net cash and returns around 25%. The valuation looks modest against those returns, but the next chapter is not free. Short video monetization, platform dependence, lumpy investment gains, and founder control all need active monitoring. For the complete source-linked 5-part research series, continue with the free Uncovered Japan Deep Dive. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or recommendation to buy or sell any security. Always do your own research.